Hello everyone, today is October 22, 2025. International gold and silver prices have plummeted, with the Philadelphia Gold and Silver Index falling 9.57%. Spot gold prices dropped over 6% intraday, hitting a low of $4,080.87 per ounce, marking the largest single-day decline since April 2013. Spot silver dropped 7.11%, marking its steepest intraday decline since 2021. COMEX gold futures fell 5.07%, while COMEX silver futures declined 6.27%. This price volatility was primarily driven by news developments. On the 21st, the French presidential office released a joint statement by multiple European leaders on the Ukraine issue. The statement expressed strong support for U.S. President Trump's position on Ukraine, calling for an immediate ceasefire between Russia and Ukraine with the current front lines as the starting point for negotiations. Ukrainian President Zelensky was among the leaders who co-signed the statement, alongside several other European leaders. The statement introduced three significant shifts. First, it formally acknowledged for the first time that the current de facto contact line serves as the basis for negotiations, marking a shift from battlefield-determined borders to negotiation-determined borders. Second, it upgraded the use of Russian assets from interest income to access to principal, breaching previous legal and financial boundaries. Third, Europe has publicly aligned with the Trump approach, indicating broad consensus between Europe and the U.S. The outcome appears to be, Russia suffers financial losses, Ukraine loses territory, and Trump wins the Nobel Peace Prize. Who loses and who wins no longer matters. This news triggered a sharp decline in safe haven assets. However, the Russia-Ukraine war differs markedly from other conflicts. Several wars this year, such as those between India and Pakistan, Thailand and Cambodia, and Pakistan and Afghanistan, were brief, with short negotiation periods. Parties often reached agreements after mere hours of talks. Yet the Russia-Ukraine war has persisted for nearly 4 years. Numerous issues require negotiation, including substantial border changes, massive casualties, and colossal economic losses, inevitably prolonging the talks. The last major conflict of this scale was the Korean War decades ago, involving China, the Soviet Union, the United States, and NATO. Ceasefire negotiations then lasted 3 years, reflecting a fight-while-negotiating dynamic. There's a saying, what cannot be gained on the battlefield cannot be gained at the negotiating table. The longer the war persists, the more beneficiaries emerge: arms dealers, logistics providers, technology firms, and numerous other industries. None of them want the conflict to end. Consequently, this creates a short-term bearish impact on gold prices. However, in the long run, gold prices will revert to their fundamentals. First, the US dollar is nearing the end of its quantitative tightening cycle, leading to an increase in the supply of dollars in the market. The first destination for this influx will be dollar-denominated stock markets. Second, the internationalization of the renminbi is accelerating. Saudi Arabia has begun trading oil in renminbi, and Brazil and Australia have started using renminbi for iron ore transactions. This reduces the global usage of the dollar, shrinking its role as a global trade reserve currency. The resulting dollar glut will push up the prices of dollar-denominated commodities. The primary reasons for the decline in crude oil prices are the significant adoption of new energy vehicles reducing petroleum demand, and the Russia-Ukraine war leading to sanctions against Russia, forcing it to sell crude oil at prices only slightly above production costs. Third, central banks worldwide continue to harbor distrust toward the US dollar, increasingly turning to gold as their primary reserve asset. Gold's safe haven attributes, honed over millennia, remain unmatched by either the US dollar or Bitcoin. Translated with DeepL.com, free version.